Hey traders, John Howell here, and in this video I'm going to be covering the first part of this interview that Ray Dalio did, and I want to cover something here because he's talking about how the stock market won't make new highs, the S&P and the Dow, I'm assuming, for a very long time. So I want to play this with you. I want to play this sort of short clip for you, and I want to share with you what I think about it and what I'm seeing also on a technical long-term basis, which may go inside with Ray Dalio with what he's saying for the S&P and the Dow Jones. Anyway guys, let's get straight into it. Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. All right traders, so let me go start and play this interview for you right now.
Okay, so lay it on us, Ray. How bad is it? How worried should we be?
Well, I think you could look at this like a tsunami that's hit the virus itself and the social distancing. And then what are the consequences in terms of the wreckage when you look at it? And I think you have to think of that as incomes and balance sheets, you know? So it was a tremendous income hit. And then the balance sheets, losses, and who has what savings and so on. And then how is that dealt with? And in order to understand that, you have to realize that there are these holes in income and the holes in the balance sheets. And then you have to realize that there is the production of money and credit. And who produces that money and credit? Okay, the money and credit comes in different flavors. There is US dollar money and credit. There is euro dollar money and credit. And so when you look at the world and you're seeing a situation that is the same as existed really in the 1930 to 45 period, in that now we're seeing the production of a lot of debt, a lot of borrowing by the government. We're seeing zero interest rates and not the traditional kind of monetary policy, but the producing of a lot of money and credit. So the Federal Reserve is buying the Treasury's debt, and the Treasury is getting that money to mostly Americans in some imperfect but remarkably large way. And the Europeans are doing the same in their way. That bank is a smaller bank because the world lives with about 70% dollars and only a small percent euro, and they will produce theirs for theirs. And there aren't many banks around the world. And so the rest of the world is going to have gaps, holes that won't be filled. So if you think about that and you say American printing of money and the borrowing will leave us with a lot of debt and monetization. That's something interesting to talk about, and we need to talk about that. Who will pay these bills, and how will that be shared will be something we need to talk about. But you will know that you will get that money, and that the Europeans will get their versions of that money. But we are in a new world, and that world is most similar to the 1930 to 45 world, and a lot of the world will not get that money and credit. So there'll be a big differentiation.
So what Ray Dalio is talking about there is the same situation that right now he's saying that we're in the same sort of 1930 to the 1945 period. And you can clearly see that there's a few things that actually happened back in that time. The first thing that happened back in that time was indeed that we actually started to see a bit of a new world order in place. We also saw 0% interest rates, and we also saw that this red line here is indeed the government debt, and how after that 1945 started to become restructuring, devaluing, and so on and so forth when it comes to the debt. So he's saying that we're in that same sort of 1930 to 1945 period. Probably if we're going to sort of use a timeline there, it's probably around the 1938 period, so on and so forth. So we've probably got maybe another year or so, but what's likely to happen moving forward is interest rates are likely to stay low for a bit longer, and then we're likely to start to see a devaluing soon of the debt and so on and so forth. So that's what he's talking about right now. He's talking about how this 1930 to 45 period has indeed, that's very, very similar to what we're seeing right now.
As to which entities benefit and which entities don't. And there'll be a big collaboration as to how we will deal with that bill and who will end up with what. A big question of wealth distribution and all of that. So that's the big thing that's going to be happening.
How confident are you that some of that collaboration can happen right now?
We're now at one of those defining moments that I've seen repeatedly. The 1930 to 45 period, if you go back in history, there's nothing new to this. And it's a defining moment in terms of how people are with each other. So when you look at it, will people come together? Or when it comes down to it, really, will there be a taking care of oneself? And what does that define? And how will that go? That'll be, I think, a defining moment. So I look at these histories. If I can take a minute, I'd like to just paint a template for you that takes us, over the last 1,000 years, the things that have happened over and over again. There is one pattern that I'd like to convey. May I take a moment and do that?
Absolutely.
There are 4 things that are the driving forces of our economy and our lifestyle and wealth. And the first and most powerful is productivity, which comes from people learning and inventing and doing things well, just as Marco described. Okay? And it grows slowly. 1 or 2 or 3% a year, it grows slowly, and it's not volatile because knowledge isn't volatile, but it grows, and that raises our living standards over a period of time. Then there's a short-term debt cycle. The short-term debt cycle is, recessions and expansions and booms and recessions, that they last about 8-10 years. And then there's a long-term debt cycle. And that long-term debt cycle, which goes on about once every 50 to 75 years, is when you begin a new type of money and a new type of credit. That began in 1945. The New World Order, at the end of World War II, and with the Bretton Woods monetary system, created a new monetary system in 1945, a new money. So they wiped out pretty much the old money, or they largely disposed of it, and they began anew, and that's the New World Order, which was the American World Order, and we have.
So you can see what he's saying there, what I was mentioning before about that screenshot that I shared with you a minute ago, which was this screenshot here. You can see here they saying that the old money and credit was actually just wiped away with the new money and credit coming into place. So that was the New World Order through there. So that's what Ray Dalio is talking about right now.
I've seen it, and still 70% of the money and credit that exists in the economy is running by dollars. And what you have traditionally is the breakdown. And then the fourth influence is politics. And politics is largely how we deal with each other. And there's internal politics and there's external politics. The internal politics is, how do you deal with the wealth gap? How do you deal with the values gap? Do you have a common mission? Do we have an American dream that we can agree on and that we're pursuing that together? Or do you fight over wealth and so on? And so when you look at history, that's what revolutions are in their various ways. And there's always a revolution in one of these. Sometimes those are peaceful revolutions, and so sometimes they're disruptive. But it's a wealth shift that needs to take place. So the Roosevelt shifted policies and changed taxes and so on in that way. And then in other countries, there was the turning over democracy. Hitler came to power because of that gap. So how people deal with each other internally. There's also external politics. So that politics means between countries. And you have a situation when there's a rising power challenging existing power. There is competition and there is a risk of war. And so how they deal with each other so that whether there's a greater good or whether they are fighting with each other is the defining moment. There are always stress tests, these big stress tests that come along once every 75 years. And when they happen, and this is a stress test. And I think that what you're going to see is as how we deal with each other. There's enough wealth to go around, but what do you do when you're outside the ring of support, let's say of the US dollar? And what is that going to be like for those entities? Or if you're within the ring of support, how will that bill be divided? And how will we be with each other? I think we're going to have to reconsider who has what is it about education and so on. So that's what we're in, I think.
And I want to get to, because you've written extensively about how capitalism needs to change and some of the things that we should be thinking about and doing, and I want to definitely get to that a little bit later on. But I am curious right now, I mean, just from a practical level, do you think that we're headed into a global depression?
Yes, but I want to be careful about what I use the word, like to be
right,
technical.
Absolutely.
The word is an evocative word.
Sure.
And it could be scary and so on. So what do you mean by a depression? Okay. Something like happened in the 1930s. So just to repeat, 1929 to 1932, there was a fall in the economy and a very double-digit unemployment rates and a magnitude of fall in the economy like about 10%. Do I think we're in that? Yes. How was that dealt with? 1933. What they did is they printed a lot of money. And the government came out with the same type of programs that we're having now. Yes, okay, same thing. Zero, interest rates hit zero, same thing. Okay, same dynamics. And then there is that money causes an expansion from that point. How long does it take for the stock market to exceed its highs? Or how long does it take for the economy to exceed its former highs? A long time. Okay, do I think that's what we're in? Yes, that's what we're in. We've seen that happen repeatedly in history. So many, many times. It's just the most recent one. And there's a struggle.
So we can see that that's what's going on through there with what Ray Dalio is talking about. Now, what I want to do is, he's saying that the stock market won't make new highs, and it won't make new highs until for a very long time. So let me actually share a chart with you, and we'll go from there. So what we're looking at right now is we're looking at the Dow Jones on our monthly charts. This is just a monthly line chart, and this is going back since, say, 1995. We had a big boom, bust, and we had this very big leg up. Now, the interesting thing that I'm noticing through here, Ray Dalio has just said that he doesn't think we're going to make new highs when it comes to the Dow Jones. Now, the really interesting thing is that if the Dow Jones does fail where we are right now, remember this is a monthly chart, so this is going to take probably another 6 or 12 months to form out where we are here. But if indeed we do start to hold here, and then we start to see a bit of a trickling down, this could be a bit of a shoulder, head, maybe a massive shoulder pattern. Again, this is a monthly chart, guys, so this chart won't move for another month, and then another month. So this is probably going to take a good 12 months for it to see what we're likely to see through here. And also, we can see that the S&P 500 is pretty much almost at its all-time new highs when it comes to the monthly charts. Here's the weekly charts when it comes to the S&P 500. So it's actually interesting to see, we're starting to see this sort of pattern, especially on the Dow Jones. We're starting to see this sort of pattern where we're sort of struggling. You can see all this resistance level around the 26,000 to 27,000. We've been struggling through there for quite some time. So leave a comment below. Let me know what you think about this video and about what Ray Dalio is saying. Do we pause here and continue to drop? Or do you think, the Fed's going to come in and keep buying this up? Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. See, in this brand new Go to the Markets by the Balls trading course, and you can get it when you go to johnsfreegift.com, you're going to learn, firstly, you're going to get access to a brand new training course for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get rich quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So go to johnsfreegift.com right now, or click on the very first thing in the description, because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course, plus also the free training with my #1 trading system with over 90% success rate. Go do that right now, and I'll see you on the next page.